And welcome to another video. My name is Robin, and as per usual, I'm joined by Boba. No, just kidding. By Kirill. and,
Did not expect that.
and we will start it up right away with this headline: Why Starbucks stock could be more than double under its new CEO. So this is, of course, this news from like 2 weeks ago. We actually made a video about Starbucks over the weekend before they announced this new CEO, and of course, we couldn't upload the video anymore. But it's good to to reevaluate now that the dust has settled a bit. Let's go into it. Let's see what the man can do. So can you please scroll down to the nice bullet points they did?
Of course.
And we will go into that later. Um, but for now, it says okay under his leadership, Chipotle soared 7x. Um, he retained workers, which is normally not something that really excites shareholders. But anyway, but he opened about 1,000 new stores globally. You should keep that in mind for in a bit because we'll go over that real soon. um, and he introduced new technologies, whatever, monetized digital, whatever. See, that's something that I don't think is really needed for experience needed for Starbucks. So we'll go over especially about 1,000 new stores. So yeah, Kirill, could you open up the 930 app, please?
Ta-da-da-dun, ta-dun.
All right. So as per usual, we have of course 4 steps for our videos. So number one, we already crossed it up. It's what's the news. Then we go over the fundamental of the company. We go over important ratios, and finally we're gonna give you a valuation. But Kirill, as you always say, this is not financial advice. This is just the start of doing your own due diligence. But at least that's the value you're gonna get. And remember the 1,000 stores from Chipotle. All right, let's get into it.
Right. So it's very funny because when we did our previous video, as Robin mentioned, we were thinking like, oh yeah, $75 could be a good valuation for the company, and then on the day when we're about to publish it, then we see this lovely news, and then the stock goes up 25% or something, and we're like, okay, yeah, that's definitely not a good idea. So it's good to revisit it one more time, and as you can see, the numbers are pretty okay. You can see all the green check marks everywhere. The return on invested capital is quite good. You get not a bad dividend, right, of about 2.3%. The margins are also okay. I mean, considering also the fact that it's a coffee chain, it's a coffee shop chain, and the PE of 20 is also good. Even though it was better before, it was way more lucrative before. Never mind now.
And
Um,
also good to highlight real quick, sorry Kirill for interrupting, but
mhm.
the PE ratio, like I said, it's like 21.5 at the moment. It's actually, if you would just go on PE ratio and compare to the industry is now has an average PE of around 22, so 22.06. So it's actually on first glance you could already maybe assume like okay, this is might be a better deal in the industry. Yeah. So let's continue.
Yeah, yeah, yeah. And it's also keeping in mind it's quite a big, quite a famous chain of restaurants, right? So
Yeah.
you are not overpaying for one of the leaders, at least on the PE ratio perspective. Yeah, but then we'll move on further to the valuation part, and we'll see if it's still the same assumption or not. But yeah, like when we look, for example, further at the revenue growth, free cash flow growth. Nothing special, because it's already quite saturated market, and there's even more competition popping up here and there, with even like other caffeinated drinks being offered under other brands, like in the restaurants or in supermarkets. So it's getting probably tougher for Starbucks, to fight the competition.
And also, let's not forget China. They have had Luckin Coffee for a long time, and it's also been growing. It has been delisted from the American stock exchanges due to some financial situations, but they are still operating, and they're one of the major change in one of the biggest markets, right? So that's also something to consider there. And like you said, like the growth of the company is not really that interesting at this point. So you should also classify that as that when
Yeah,
we look at the valuation.
yeah, exactly. Yeah, and yeah, the only good things is the rate of share buybacks, which is quite aggressive, I would say. So it's
Yeah.
56% over the past 8 years. That's very good to see, but then the question is again how how well it is managed in terms of like, okay, if the company buys back its shares when it's super expensive, and it's quite questionable. And the dividend growth is not so great. It's almost 6%. At least it's above the average inflation rates yearly. Could be better, could be worse. Yeah, nothing to really highlight here, to be honest. Yeah.
All right.
Yeah, and moving on to, let's say, anything else to highlight in the key financial ratios.
We can
Yeah.
just go quickly over it. We see some dipping, but the 2020 and makes sense, of course, COVID, right? We sometimes I forget it even happened, but it happened,
Mm,
and so that is
yeah.
something that's reflected here. But we see just steady growth, even though it's not as we've seen y- significant, right? Net earnings pretty stable, even though they are growing. So that also means that they are having more costs. So yeah, then we also see, for example, the shares outstanding that we just talked about, so that it's decreasing due to the share buybacks. It's fine. It looks good. Yeah, don't see anything significant here, to be honest.
Yeah. Yeah, same here. I think they are more important to look into the ratios, right?
Yeah. So here it's the selling and general expense ratio. It's good to see that it's underneath 20%. That means that, of course, we all know Starbucks. It's a strong brand, and we can see that it can ride the wave. So it doesn't really have to spend a lot on marketing to sell their products. Of course, also because coffee is probably maybe sure definitely addictive. So let's see this sells itself, especially in, for example, the American markets. This is really important. Um, yeah, that's just really good to see. Now that we also saw, for example, I did see a news article that the new CEO got slapped on his fingers because he uses a lot of his private jet. So we might see that the selling and general expense ratio is going to go up in the next year.
Yeah, well, hope not if you want to invest in Starbucks. Yeah. Yeah, true.
Yeah, and then there's nothing really major here.
Yeah, yeah. It's just as I think we also highlighted in the previous video, like what we filmed is that, yeah, it's just a coffee shop chain. There's nothing outstanding in there, and there's not a lot of growth you can anticipate, neither in revenue nor in free cash flow nor in the margins probably.
Yeah.
It has some good, results. For example, on return on invested capital. Of course, margins are okay. You cannot really say that they're outstanding like in tech companies, but it
Yeah,
is what it is. Yeah.
the margins are actually pretty good. I mean, we're talking about food here, an
Mm.
industry which already has quite low margins in general, right? Um, so they have this advantage that they can ask more money for the brand. I mean, you and I can both see this when we gonna pick up a double espresso at Starbucks or at a local kiosk at the station. I know where the price difference comes from, right? It's not because of the beans. And that's also reflected here in the margins. And that's also, I think, why it's so pretty stable. I mean, they don't have a lot of R&D. They don't really have to sell it. So, of course, it's stable.
Yeah, exactly. And also, for example, there's still a bit more margin than, for example, in food products, right? Because beverages usually have a little bit better, marginality as a business on its own. But yeah, nothing outstanding in here,
Yeah.
to be honest. Yeah.
All right. So then we can do a dive into their valuation. So here we can, of course, do a couple of things. In the meantime, I'll just quickly look up what the analyst thinks
Hmm.
it is worth, or at least the growth that they have in 5 years, let's say. But Kirill, you can go over the other ways on how we can calculate yeah the projected growth rate.
Yep. So basically, you can either do it through our app directly. So, for example, you can check what was it for over the past 8 years, and as we discussed, let's say the revenue growth was around 5%, and the free cash flow more or less the same. Um, and for example, we can also set the projected period for around 7 years. I would say even 10 years, to be honest, because it's highly unlikely that Starbucks is gonna go out of business unless the new CEO is gonna do something very, very interesting.
Yeah, like installing two Starbucks shops on his private jet.
Yeah, yeah.
So also the analyst thinks they think it's around 6.86%. So I'd say if you would put down 6.5% growth or six maybe, that's probably around the average of the average revenue growth and also the average free cash flow growth. So I would put six
Sure. Yeah. 10
But
years?
then
Shall we do
also
10 years?
I told you I told you also to keep in mind the thousands stores from Chipotle, and I also kind of forgot about it myself.
Mm-hmm.
But the thing, like we already discussed, is that it's kind of saturated. It's like Starbucks is in most countries right now. So I think that the hope is for the investors have, and probably why the share price went up as well, is because they might think that he has some ways into new markets that Starbucks hasn't explored yet, and that might actually be really beneficial for increasing the growth of the company.
Sure. Yeah, I mean, we can also consider different scenarios, and we can assume, like, for example, yeah, that the growth rate could be even more than that. Let's say we
Yeah,
can, let's put it like that. Let's do 10. Let's just do 10, that we're being hyper positive that the new CEO is gonna boost everything out of Starbucks, and it's gonna be rainbow and unicorns all the way. So why not? Sure.
yeah. All right. So then for the discount rate, we always leave this at 10%, but of course it's something for you to play around. Um, when we talk about the projected PE ratio, here you can see immediately on our beautiful web app what the highs were and the lows were. It's a bit out of whack at this point because the high PE ratio was 107 and the low was more, common. So 36 is quite high in my opinion, especially if you look at the industry is hovering about 20, 21
Yeah.
points.
Yeah.
So maybe just give it that.
Yeah, I would keep it at 20. Let's say 25 tops. Yeah, really.
Yeah.
Yeah.
And then the required rate of return, as per usual, if you invest, for example, in S&P 500, you expect like between 7 and 10% returns. But because of your stock picking, you have added risk. And in order to, of course, be paid out for the added risk, you want to give yourself a little bonus. So here you can do anywhere between 10, 15 percent or whatever. Even if you want to make like a 50% return, of course, you're going to have a harder time finding those deals, but you could do it for sure. But if we do the required rate of return are always around 12%.
Yeah. Yeah.
And then the margin of safety, this is how much, for example, you know about the industry. If you know a lot about coffee industry, then the margin of safety can be very low. If you don't know a lot about the coffee industry, then the margin of safety should be a bit higher. Or also, when there's a lot of volatility in the stock, you could also increase the margin of safety just for you to be on the safer side of things. But like you said, Kriel, I don't think that Starbucks is going to go anywhere. And I would even say like the coffee industry is not really difficult to understand. They don't have a difficult business model. Maybe just put a margin of safety of 10 in here. I mean, they sell coffee. It's not
Yeah,
really
sure.
difficult to understand.
Yeah.
And then we go down and you press the analyze button. Oof.
That's even more interesting what we had before, huh?
Exactly. So see, and this is also the reason why we wanted to revisit the valuation, because when we did the valuation, we said, okay, maybe you want to pay a bit of a bonus, of owning a good quality stock, but now it's just a bit out of whack. And only because the CEO is announced, the dude didn't do any work yet. He just came into the office, and shareholders just decided to give him, 25 billion dollars to the company just for him being there. Yeah, I think that's a bit ridiculous. But now that you do the 15 years, Kirill,
Yeah,
it should
exactly. Yeah,
it's a gift for me.
I was just doing it on the background. Yeah. So the thing is, again, it's really also a matter of the perception, right? Because, for example, according to the net present value formula, yeah, the sky is the limit, especially with these assumptions of 10% growth rate. Well, P is okay, quite realistic, but if we half the growth rate, it's also going to be probably around $100 per share. So if we do the projection over 15 years, yeah, the result would be in the ballpark of $75. I think that's what we had in our previous video that we filmed. So for us, like, let's say the most important takeaway from this piece of news is that some of these things are just so unrealistic when there's just one thing that happens on the internet, and then like, for example, the appointment of a new CEO boosts the valuation by over 20 billion, which is based pretty much on nothing yet. So uh, just be careful again when it gets to these kind of things. Just don't follow the news, don't follow any kind of hype, let's say, and just actually follow the process, follow the system, and that's actually gonna pay off later.
Exactly. And that's also why I think the app is great, and that's also why we use it ourselves almost daily. It's just if there's some news, you just read the story again that you built, right? Okay, so we have this company. What changed, and is it worth the money for this one change? And for now, the answer should be probably not, right? Because, like you said, the guy didn't do anything yet. He just waddled into the office one day, and the company got a lot more worth. So, see, these are the things that you have to consider, and that's uh, why our app really comes into play. So yeah, with that said, normally I would say, where can you buy this lovely app? But at the moment, we are still in the phase of testing. We're launching very soon. So make sure to follow our website, 930.com. Make sure to follow us on social media. And of course, subscribe and hit the bell button so that when we launch the app, you are the first one to know. And with that said, as per usual, Kriel, thank you so much for your insights. And yeah, have a good one.
Peace. Get your beer. Get your beer, boy.
Got a six pack drinking with my left hand.
All right, off you go.